I'll just pick up. All right. All right. So thank you all for rejoining me. I can promise I won't need one more session after this. I'll be finished with this one. Thank you all so much for being patient with me. I appreciate your love and your kindness. All right. So we're back. I think we're missing one person. But we gonna just, did I miss anybody? Oh, Charity. All right. So let me share this screen. No, wait. There we go. Share. It's sharing. All right. Okay. So that everyone can see the screen again.
Yeah, it's good.
All right. So where we left off was so you have your 3 levels of resistance and your 3 levels of support. And so a major thing to note and know when you are trading is that whenever a major either resistance or support level is broken, they switch roles. I'm going to do my best to explain this very clearly. So once resistance is broken, so let's think of it like as a ceiling. So if this is a ceiling right here, this is like the buyers really trying to just break through and get to level 2, which is our second level. So once they break through, they say, yes, we finally got through. This now becomes support or the floor. So it was once resistance. Buyers were trying to overcome the sellers. They were trying to drive the price higher and higher. So they failed right here and dropped all the way down here. Buyers came back strong. They finally broke through. And now, once they broke through, this has now become the floor or support. So to just make it even more clearer, it's like when you're starting a business and you make your first, let's say, 50,000. You've been working hard and it took you like 2 years to actually get $50,000 in profit. You're like, okay, boom. Once I finally crack that first 50K, I'm going for my next 50K. You have now made 50K the floor, and your job is to just exceed those expectations to go to 100K, 150, 200, eventually to $1 million. So now your 50K is floor. So now you're telling yourself, we're not making no less than 50K a year now. I finally broke through it, and we're going up from here. So that's essentially is what happens here. So they break through, and now the buyer's job is to say, hey, look, we're driving this higher. We're not trying to go any lower. So they broke through. Oh, shoot. And now it became support. And then you see right here, the second level this was our second level of resistance. Buyers broke through, boom, and now it becomes support. And so now, as you can see right here, once it gets down to support, we say we know support levels because prices get down there and they bounce off. And so that's what started to happen right here. They finally broke through. When it came back down, it came right down to our former resistance level. And sellers were trying to get it back down, but buyers held strong for a long time and kept it up until they eventually just lost. And then boom, we see right here, it broke through, and then it once again became resistance. So does everybody see that? Does that make sense?
Yes, sir.
Okay.
Yes, that makes perfect sense.
That makes perfect sense. Okay. So it happens on the same thing, like support eventually becomes resistant. So this is once a support level that we drew out. When it broke through, boom, prices came right here, and it became resistance. So just a quick little tip about like why we are to apply biblical principles, not try to rush to get rich fast and all those things. Let's take our time, master the skill of trading, and over a long period of time, we earn money. Because like I stated before, there are wolves out there. Wall Street job is to trick you, trap you, frustrate you. So if we look right here, right, let's say we charter out our things. So let's just pretend all of this is not here. From this point on, this is blank. So we're right here. This is how Wall Street tricks a lot of people, the little people, that's us, the small business owners, or just everyday 9 to 5 workers in America that are just trying to learn this skill like they have. What they'll do is they see us and they know we know the resistance level. So they know we can see this and be like, man, every time price get up here, it falls. So remember I said, whenever it breaks a resistance level, it goes up and then that resistance eventually becomes support. Well, what happened right here? That didn't happen. It went past it, it broke it, but it came back down. This is one example of how Wall Street tricks, traps, and frustrates a lot of people. People lose thousands of dollars, millions, and sometimes multiple $1 million because they weren't patient. They just jumped ahead. So what happened here is Wall Street knows most people are going to predict that prices are going to go down, and I'll explain this part later. But they'll buy something called a put. You buy a put when you're trading options when you think prices are going down. So what they did was they broke it a little bit past resistance. Most people, again, using that same casino example, you're going to have the people that are just gamblers. You're going to have the people that just coming in intoxicated, drunk. They not focused. They just like, oh, they think they got it in the bag. Oh, bro, I know this. I can make money in my sleep. Ooh, ooh, ooh. It broke past. And what people will do is they'll be like, oh, it broke past. We're going to a new level. And they'll get in and they'll make the prediction that prices are going to go higher. Wall Street faked them out, tricked them, brought it just a little bit past, just to, because they know psychologically people got to see a certain number or a certain thing for it to register in people's mind that, oh, we are actually going higher. But they tricked, trapped, and frustrated a lot of people, and they drove it past a little bit. Now, again, each of these candlesticks represent one day. So for 1, 2, 3, 4, 5 days, they tricked a lot of people and just drove it back down. So how do we avoid getting caught up in the trap? We be patient and we wait for confirmations a lot of times. So if we see that prices are going a certain way, right? Say we're in the trade, we're down here, we're watching, and we're like, oh man, okay, so it's getting to our resistance levels. So I see 5 times before that every time we get to this level, it's about to drop. So, oh, all right, it's coming up to it. Bet, bet, bet. So I already know what's about to happen. I'm about to enter this play and say that it's gonna go down. But what we do is we don't jump right in. We wait for different confirmations. So, dang, I wish I could zoom in on this. But as you can see right here, this is 1, 2, 3, 4, 5. These are 5 candles. We will essentially wait for this candle to come back through to enter into what we would call, if we're doing options, a put to say prices are going to go back down. And eventually we see it does. It goes back up to retest, but eventually goes back down. So that will essentially be a winning trade if you're holding your trade. So we always wait for confirmation. So there are multiple examples of wait for confirmation. So even looking down here, right? We drew this out as a support level. It broke through. And like I said, it always reverses. It was resistance at first, but boom, it became support. So we will wait for confirmation, because if we get in right here, who's to say this isn't still resistance like it was down here, and then it goes back down. So we will wait for confirmation to see what the next candle does, to see if it closes above our resistance or our support level. In this case, this would be a support. We like, okay, now we know we're going up. So even right here, we see it's coming down. We can make a smart position to say, okay, this is our first support level. It's going down, but what did it? I mean, it's going up. It's going to bounce off the floor and go back up. But before it did that, it went down just a tad bit more before it went back up. So for confirmation, we would want to wait to see it bounce first. Once we get that first bounce, then we would get in. So we will wait to see this green candle to say, oh, okay, it's going up because it closed above our major support level. So now we get in on this candle and then we take it up. Does that make sense?
Yes, sir.
All right. So congratulations, you all. You now know how to trade. Trading is just that simple. The concept of trading is literally just that simple, using this support and resistance strategy. You wait for price. Once you draw your levels, well, first you identify the trend. You say, okay, this is the uptrend, or this is the downtrend, or this is consolidating. Once we identify it, we identify our levels of resistance and support. We draw our 3 levels, and now we just simply wait for prices to hit certain points. We wait for extra confirmation so we don't get fooled by Wall Street, and then we enter into our play. So we know every time prices get up here, we gonna say, oh, it's going down. We make that prediction, and then if everything goes right, it'll go right and it go down. We know whenever price gets down here in the 240s, we know it's going back up. And so that's literally all trading is. That's literally all trading is. And just to bring the kingdom principle back into it, it's just as simple as reading the Bible, following God's word, doing what he says to do. God laid out things very simple. We can even use something as simple as the 10 commandments. Don't steal, don't kill, don't what other people got, don't lie. Those are very simple concepts. Anybody in this world could just follow the basic principles of what God said and live a saving righteous life. But the reason why most don't do it is because they get in their own head, and then they just try to play God themselves, and they try to do whatever they want to do. That's essentially what happens in trading. Most people just try to do what they want to do, get in their own head. They get ahead of themselves and think they can play Wall Street, and they lose out. So it's just as simple as that. Literally, like, you all, if you've never traded before, just learning this simple support and resistance strategy, you literally now know how to trade. Now you're honestly just mastering things you probably never really worked on consistently, like learning how to be patient, learning how to be disciplined, learning how to wait for confirmation so that you make the right move just about every single time it come out on top. That's where most people lose. That's where everybody really loses. You'll never hear people losing trades because a certain setup didn't work. Well, they're not losing over a long period of time because a certain setup didn't work, or they drew the wrong line here, or this and that. Like, if anybody ever quit trading or stop or just sucks at it, it has everything to do with their mental, nothing to do with the strategy. And you can literally go research that, look up pros from the 80s, 70s, before Robinhood and all these things came out. It's the same concept across the board. Again, it's literally just like the Bible. Nobody in the world can say following the Bible is hard. It's the simplest book to ever understand, but it's human flesh that gets in the way that makes it hard. So if you can learn to master yourself, the same thing is literally the same thing God told us to do, to just take control over our flesh. Don't let our flesh rule us. We rule the flesh. We let the spirit rule the flesh. If you can learn to rule the flesh, if you can learn to rule your mind and not jump the gun and be like, oh, well, I know it's going, I'm gonna get in right here, and I know it's gonna go down. Like, I just know I'm that. This might be the one time that it goes opposite and you just caught on the wrong end. So that's why I love trading, guys. So again, once again, congratulations. You all know how to trade. So now I'm going to touch briefly on options, and then we can have a small dialogue if anybody got any questions. So what is options trading? So options trading is the buying and selling of a stock temporarily with hopes of increasing your money faster. You do this by purchasing contract. That's my personal definition of options trading. So with an option contract, you're buying 100 shares of a company. So like I stated earlier, you buy calls if you predict that price will go up. You buy something called puts if you predict that price will go down. So again, looking at that McDonald's, how do I go back? So looking at that McDonald's chart, we see every time price goes up here, we can make the smart prediction and buy a put and say, oh, it's going to go down. Every time price gets down here, we can make the smart prediction and buy a call and say, oh, it's going to go up. So that's what that is. So for example, as of 9/11, the McDonald's stock price was $291.31. So in order to own one stock of McDonald's, you would have had to put in $291.30. But with options trading, you could temporarily own 100 shares of McDonald's for as little as $28. And this is where, like, the game changer of financial freedom, kingdom wealth, and all these things come in. So I'm going to really do my best to explain this. I went over this like 3-4 times. So hopefully y'all get it. And again, please, please, please stop and ask any questions that you may have. So this is Robinhood. This is what Robinhood would look like if you had it on your phone or if you have it on your phone. So over here to the left is the McDonald's stock. So again, I screenshotted this on 9/11. This was the current price of McDonald's, $291.30. Over here are option contracts. So if you were on the Robinhood app, you would click this button down here and trade, and then it would give you the option to either buy it straight up, which you would have to put in $291 to like own it and hold it for as long as you want, or you get the option to hit trade options, and then this would be your next screen right here. So this right here is the share price, the $291.30. These numbers on the left are called strike prices. And this over here are the contract prices. So remember I said one contract is like buying 100 shares, temporarily owning 100 shares of a company. So if we look over here, this is what this will look like. So remember I said you could buy it for as little as, or you could temporarily own it for as little as $28. So right here, we have a strike price of 282.5, and this is 28 cents, which is in reality $28 because you would have to times it by 100 to temporarily own it. So this is where it really gets fun for options. So the good news about options is that you can earn a lot of money really fast. And again, Wall Street knows this. Wall Street knows small people like us that don't have hundreds of millions of dollars. And we're like, man, we're just trying to make it out. We're trying to earn a lot of money. This is where people get excited and they just, oh man, I'm finna run it up, blah, 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 blah. I know how to trade now. And in actuality, you actually do know how to trade, but you don't know if you have mastered the mental skills yet, which most likely you haven't. So this is where people get excited because you can temporarily own it. You can buy a contract for as little as $28, price go in your favor. Dog, you can run up like $300 off of $28 in a day, in an hour, 15 minutes, depending on how price move. It's literally that simple. So let me just break it down for y'all so that y'all can understand. So I'm going to do it over here. So since today is the 15th, we see up here, right? So these are, remember I said option contracts are temporary ownership. So up here are the dates, and these are the dates that the contracts expire. So September 13th, the 20th, 27th, October 4th, October 11th, right? So you see over here on the 13th, a 290 put was worth 158. But if you buy yourself more time, you buy yourself an extra week, that same contract is now 294. Why is that? Because time is the most valuable thing anyone could ever buy. That's all everyone is after, is buying more time. So if you, whenever you want to buy more time, it's going to be more expensive. So the share price and the strike price. So anything within 3 strike prices of the share price are called in the money contracts, ITM, in the money contracts. So 290, 287.5, 285. These are called in the money contracts. And these strike prices are just essentially where if you think the share price would drop to this number. So if you think McDonald's will drop from $2.91 to $2.90, you will buy this if you have the money for $2.94. So these are in the money, and anything after 3 strike prices of the share price are called out of the money. So this 282.5 all the way down to 275 and lower are all out of the money contracts. So if y'all are still with me so far, I hope you all are, because y'all just really don't like to talk back. I'm just going to assume y'all are. So what are the difference between in the money, out of the money? What all these numbers mean? I'm about to explain it. So essentially, all you need to know is, I got you, D. So hopefully I make this just as simple for you right now. So all you need to know is the closer you are to the share price, right? The closer you are to the share price, which is $291.30, the more money. Wait, let me make sure I say this right. So the more money you make. The closer you are to the share price, the more money you wait to make if price moves in your favor. So, for example, because this is 1 strike price away from the share price, this is at 294. This is a put, so we're predicting that price will go down. So for the sake of this example, let's just say that every 5 cents that McDonald's goes down, this contract becomes more expensive, which means you make more money. So you bought it at 294. It was worth 294 when the share price was at 291.30. If this share price goes down to 291.25, let's say you make $5 off of each 5 cent move. So this would go to 299. So every 5 cent move it makes in your favor, you earn $5. Does that make sense?
Yeah, that part makes sense.
All right. So the further strike price away you get, the less money you make per movement. So while you just need this to move 5 cents to make $5, if you buy it out of the money to make that same $5 on a cheaper contract, you would need the share price to move like 30 cents. Does that make sense? So this makes...
Yeah, that makes sense.
Okay. So this just for an example. So every 5 cent McDonald's moves down, because we're in a put, you will earn $5 on this in the money contract, the 290. But if you don't have the 294, you're like, man, I'm just starting off with $100. So you would buy this one that's worth $75. Prices are still moving in your favor, so you're good. But while this is making $5 every 5 cent move, this probably will make $5 every 50 cent move because it's cheaper and it's out of the money. So the goal, and again, I stress the goal, once you're starting off, again, you might not have the money to do it. And I plan on making like a separate webinar, just strictly talking about options. But the goal is to buy in the money contracts because your money moves faster. So the pro of that is your money moves faster. You don't need as much movement to make your money, which means you don't have to be sitting at a computer staring for 5-10 hours at a day. Like, man, I'm just trying to make $5. Like, dang, it take 3 hours to make $5. No. But on the other side of it, the just as quick as you can make money is just as fast as you can lose it. So if every 5 cents you make $5, every 5 cents it moves not in your favor, you lose $5. So those are the pros and cons of in the money and out of the money contracts. It's all about your tolerance, what you're willing to handle. And the farther out you get the less money you make per movement. So if this moves $5 every 5 cents, this may move $3 every 5 cents. This may move $1.50 every 5 cents. These are in the money contracts. Once you get out of the money, you get down to like $1, and then you got to wait for 30 cents to get $1. Then you got to wait another 30 cents to get $2. So that is how that works. And then the more contracts you buy, it just doubles. So let's say we just buy one contract for $2.94. McDonald's moves down 5 cents, make $5. But what happens if we've been doing this for a year, 2 years, and we're very confident in our plays, we're charting, we've learned patience, we practiced this for literally 12 months straight. You buy in the money contracts now you're buying 10 contracts. So now that 1 5-cent move, yeah, you put in what's the 294 times 10. You put in $2,940. But in 30 seconds, it moved 5 cents. So you do, and you get $5 each 5 cent move. You just earn $50 in whatever I said, 30 seconds. And this is where people are killing, making money. This is how Wall Street is making their money. This is what they do with our money when we put it in the banks. So when you open up a savings account and you're like, oh, I'm gonna put 1,000 in here, and they say, yeah, each year you keep it in here, you earn 3% interest. Then the second year you earn 5%, yada yada yada. Say you put in $1,000. All they're doing is taking your $1,000. They're going to go trade it. They're going to have their pro investors trade it. They're going to put in $1,000. They're going to trade that McDonald's stock because they don't see the same thing we see. Oh, it's getting to 290 something. Oh, it's going to go down. They're going to buy a put, but they're going to buy in the money contract. They're going to buy whatever $1,000 can get them. But they got about 20,000 customers all across the world, or all across Florida, I should say. So what happens when they put in $20,000 in it? And in 5 cents, yeah, you put in $20,000, but in 10 seconds, 30 seconds, you just made like $3,000. And that's just 5 seconds. What happens if they in it for, what happens on the trend day, or they holding it for long periods of time and they see the trend is going down like we saw earlier in the chart? You hold that for a month and it stops dropping for a month. As it gets closer to your strike price, as it passes your strike price, the contract gets more expensive. So now it's past 290. So what was once making you $5 every 5 cents is making you like $30 every 5 cents, because it's just getting more and more expensive. It's just moving that rapidly. So that is options trading. That is essentially what I learned with trading. Again, you can buy stocks straight up, but the benefit of options trading is you can make money in both directions. If you're just investing and trading just to make just like long-term investments, you do have to wait for prices to get low so you can buy low and sell high. But when you're trading options, you can make money in both directions. Prices going up, you make money. If everything goddamn on crash and if World War III broke out, everybody started putting like their money, and you in the goddamn on put trade, oh, best believe you'll run it up. And that's how the Dallas Mavericks owner, if y'all watch basketball or Shark Tank, that's how Mark Cuban made his multiple millions. He was working for a company. They fired him, but he had a lot of money put in. He knew the company in and out. He knew that they would go under. He bought puts on the company to predict that it would go down. He bought options on it. He put a whole bunch of money in it and went in his favor. Mark Cuban, they ain't turned it to a multiple millionaire in a few months, because he knew the company, he knew how to read charts, and he knew about options. So just to wrap it up, again, you know how to trade. What comes next is the mastery of yourself. Trading will teach you about the type of person you are. Similar to the Bible, it will expose some things that you probably never learned. But if you embrace it, choose to want to overcome it, you will. I can send this to y'all. I don't really have to go into this, but one thing I do want to touch on are like 3 things. So what you need to be successful in trading is patience, putting your emotions to the side. You need focus. You need to be have an open mind, and don't be greedy. 2 things I really want to stress is being focused. I said, when you're trading, there are days when stocks can move very fast and you can enter a trade. You'll be up $100. You'll be like, oh, bet, boy, I'm finna, ooh, we good. You'll go to the restroom for 2 minutes and come back, and now you're down $50. So you got to be locked in when you are trading options or when you trade in general. Focus is the key. And the last thing I really want to focus on is just don't be greedy. When you see profit, take profit. If you got a goal to say, man, I want to make $100 a day, and you at $85, I would highly suggest don't get in another trade trying to make that extra $15. It ain't worth it. You're gonna get in and just somehow, some way, it always works. You're gonna end up only at $35 profit instead of 85, or you're gonna end up in the negatives because you revenge trading. You lost focus, your emotions got involved, and then you stopped being patient because you just
It ain't worth it. Trust me.
it definitely ain't worth it. I got caught plenty of times doing that, and that's what helped me just be successful. So I believe that was the last slide. So are there any questions? Was that clear? Y'all can take y'all self off of mute. We do have like a few, I would say pro. I don't know if they're considering themselves pro because I know they've been doing it longer than me, but Christian Coleman, for those that don't know, we went to college together. I went to college with Bree too. CC, we call him. I know he's been doing this for a while. I believe he started in Forex. And then Chad, I think he trades futures. So they could speak on that last slide very well. But for D and Tay, are there any questions? If y'all can talk or type, we got about 7 minutes left.
We're getting in together. Who taught you, bro?
You said who taught me?
Yeah.
So honestly, YouTube.
Yes, sir.
I learned from YouTube. I watch a guy named Chris Sane, and then it's another a white guy. His channel is called The Trading Channel. And bro, it really helped me. It really helped me. Oh, last thing I do want to say, because I really want y'all, what helped me with trading was literally understanding how Wall Street does things. So I just give y'all a quick example. This is not facts. Hold on, wait. What would you say is a good amount to start trading? However much you're willing to lose. So understanding the risk. So if you only got $50, you could trade with $50. I tried something out like last week. I only had $11 in my thing. I put in $11 and I traded with $11 and I turned it into $70 in like 3 days. But I was willing. It was just a good week. Movement was going a certain way and things were just going. So it all depends on your risk tolerance. And again, like I just showed you with the options trading, you just got to understand price won't move in your favor all the time. And you just got to understand, like, if it take 50 cents for you to earn $1, you got to be okay with that. Because what if, right? For example, what if the 50-cent move is in between your resistance and support level, right? So you buy at support and then it hits your resistance and you up $1. But you like, what, man? It did that whole 50-cent move and I only went up $1. And you see the other in the money contracts that made $20. But you know it's at resistance. So you know, like, all right, it hit a ceiling. So more than likely it might come back down. Are you just gonna take the $1 and be happy with the trade? Or are you gonna be like, nah, bro, I gotta make at least $5? Knowing the chart say the probability of it still going up is very slim because of that resistance. So it's your tolerance. So knowing
Don't be greedy, like you said.
Yeah, knowing what you okay with. If you want to just start off with $50 just to learn. But $50, I think even on just like a regular day, $50, you can earn $5 off of one trade, even on a thing it's not a lot of volatility. So you can do as low as $50. I wouldn't go any lower than that. I'm gonna have to take my time. I don't get on because I went to the casino, lost 50.
No, ain't gonna lie though. Take your time, please. In general, this is long. What he teaching us right now is longevity. It's not a get rich quick overnight. Yeah, you can make a lot of money in 2 seconds, 5 seconds, in 2 days.
Yeah.
but it's all about longevity. I appreciate you, bro, for real.
Yeah, man. Thank you. But yeah, and we can talk a little later. Cause I was the same way. I started with I started with $250 my first trade. And my first trade ever, I ran up $150. I was like, what the world? But my dumb behind didn't know how to sell. So $150 trade turned into like negative $25. When I say I was sick, like I didn't want to talk to nobody. I didn't want to talk to I told leave me alone. Like
Y'all would have had to take me to the hospital.
nah, it happens. But people say paper trading. I'm like iffy about like paper trade, but then there's another part of me is like, again, there are circumstances like you just got to know the person you are. Like, are you a person that ain't gonna give up? But I'll say this, D, whatever amount of money you put in, just know the moment you put it in, you got to start thinking like that money is gone already. So if you know, okay, I want to start off with $100, say each check, I'm gonna just put in 25. So I'm gonna just put in 25, put in 25, put in 25. But what you're doing, say that take 4 checks. But you get paid every 2 weeks. Dang, my math sucks. What's that, a whole month or 2 months?
That's 2 months.
So 2 months. What I would do, if you say you want to start with $100, what I would do is $25 each check. And then for those 2 months, I would just be watching the charts, taking mental trades, or again, like I said, I'll make another webinar if y'all want it about options trading. You can paper trade through Robinhood, and you can just take paper trades to build your confidence. So for 2 months, again, the market open from 9:30 to 4, Monday through Friday, and then on holidays they'll be closing. So 2 months, 8 weeks, that's 40 days. You got 40 days of just paper trading or just mental trading, taking notes and being like, okay, boom, boom. By the time you get your $100, who knows? You might feel so confident, like, hey, bro, I'm finna put in 50. So now you got 150. And that could be the difference between you buying an out of the money contract or in the money contract. So again, it's all on you. You know what you can handle. You know why you're trading. Like, what am I doing this for? So that's what I would
Real
say.
quick. You can go ahead, whoever said that.
Like, for instance, I work for Walgreens, so I had a stock option, but our company been doing bad for a long time. So something just told me to like log into my Fidelity, and I really don't even understand like what's on there. But I just kept seeing like negative, negative, negative for months. I called up people so fast, and I was like, I don't know what this is, but stop it. That money coming from my check every 2 weeks.
Yeah.
I could be putting that somewhere else. So I stopped it. So I'm like, I could take that money and learn how to do this instead of sending it to Fidelity every 2 weeks. And then I'm seeing decrease, decrease, decrease. I don't even know what's going on.
Yeah. I would do it. Like me, I would trade options smart. Again, look at the longevity and this thing from the shut off. So yeah. But
Wait,
yeah,
real quick.
go ahead.
Ain't this a demo option with option trading, right?
I believe
Like
so.
to do it in your demo to where it's like you're doing it for real, but it's just not your money. And then that'll give you a better, you know what I'm saying? Okay, I'm in the market, I see the market moving, you'll get a better feel for the market too.
Yeah.
If that's an option.
Yeah, they have them. I don't know if they still do it through TD
Shut
Ameritrade,
off, y'all.
but you can try TD Ameritrade. I know they got bought out by Charles Schwab, so they may have it, but you'll probably be able to find a few online that you can go to for demos.
Y'all want another
Hey,
y'all want another thing or y'all good?
it's up to you, bro. Real quick too though.